Right, boys, so I've just finished up reading Trading in the Zone by Mark Douglas. It's a cracking book. But I know a lot of you have TikTok brain, Instagram brain, and you can't seem to get through a book. So I thought, you know what, I'm going to put it into a little presentation here that hopefully you can digest and you can learn a little bit, because this book definitely taught me a lot, like especially about mindset when it comes to trading, and also how important it is to have confidence in your methods before you start deciding to master your psychology. So we're going to jump into this first little segment here, and it's pretty self-explanatory. You've probably heard this about 1,000 times, but mindset over strategy. If your goal is to trade like a professional trader and be a consistent winner, then you must start from the premise that the solutions are in your mind and not in the market. And Mark Douglas believed that there was an 80-20 split of what is most important in high consistency and high performing traders, an 80-20 split of the mental and trading game. So like they're focusing on optimizing their mind 80% of the time. We're going to come over to this bit here, and this is just a little bit of the common pitfalls that beginner traders and unprofitable traders fall into, and I've fallen into this myself. So fear and greed, the emotions can override your logic when money's on the line. So for me, for example, when I first started trading, I got really close every time on a top step account. I get 52,000 and the profit target was 53,000. And every single time I'd get to near that profit target, for some reason, like greed would get in my way and I wouldn't close the trade when I originally said I'd exit the trade. At the time I was trading a discretionary model, so I'd be literally watching the price, and once it reached a certain zone I'd be manually closing the trade. I had no sort of exit strategy, and I was basically closing the trade based on the amount of numbers I was getting instead of when it actually was realistic. And the second thing is the inability to accept losses. So like when I started out and I took a loss, I'd always doubt myself. I'd literally every single time I'd be feeling shit for the rest of the day, and I'd even sometimes I'd go into a revenge trading streak, and I just couldn't accept that I was wrong. I couldn't accept that I had lost, and that is something that so many people fall into, and I'm sure you've had an experience yourself where you've revenge traded, or you've not been able to accept a loss and tried to get that money back. And that follows straight onto the next one, the need to be right, like prioritizing being right over making money. So like I used to draw prediction drawings on the chart, and if say price came into a certain zone that I was interested in, I'd take a trade, even if it didn't really go with the daily bias or the 4 hour bias, the high time frame bias. I wouldn't follow the main bias because I wanted to be right about a prediction I'd made either the night prior or in the morning. And that is just something that's going to keep you in a mental loop of failing over and over again, because you're constantly going to want to validate yourself in the market and prove to the market that you're right and you can beat it. And let me tell you something that's going to be a hard truth. You're never ever going to beat the market. You're never going to beat the market. All you can do is ride waves and take opportunities that are presented to you. And we'll go through that. And the next one is the lack of discipline. So failing to stick to a plan or just jumping from strategy to strategy. Something I did a lot. I literally I'd be trading a strategy for 1 to 2 months. It wouldn't be working out. I'd jump onto another strategy. That wouldn't work out. Jump onto another strategy. I didn't stick to the plan. And that is what kept me in the cycle of being unprofitable for such a long period. So the bottom line is you can't eliminate emotions. You're always going to feel emotions. You're always going to feel good or bad about your trading. But you can train yourself to manage them, and you can trade yourself to not attach them to outcomes, to winning or losing. You can train them to have the emotions based on your performance. So have I followed my trading plan? Have I done everything I set to achieve today? And all of these things have been also covered in the book. Buddy Douglas has a mental framework to do exactly all these things that I'm talking about. So he called these the 5 fundamental truths of trading. And these are basically just hard truths that if you haven't accepted yet, you're not ready to be profitable. If you can't accept these 5 truths about trading, you're not even ready to go on to the next part of the video. If you can't accept these 5 things, Stop, pause the video, drill them into your head, and then come back. So the first one, anything can happen. I used to say, oh my God, that's a perfect setup. It's a term I used to always use. And there is no such thing as a perfect setup. There is no such thing as an A++ setup. You can't rank setups with that's a good setup, that's an amazing setup, because the only thing that matters is it repeatable and how does it work over a long period? Because any single trade, any single event in the market, anything can happen. And you could enter a position, everything looks like it's going to go up. Then all of a sudden the market decides, no, we're going down. And accepting that you have no control over what is going to happen in the market gives you so much power and so much freedom and so much more control over the emotion that the market has over you, the emotional control that the market has over you. And trust me, this is a game changer. Realizing that anything can happen, and once you place that trade, it's no longer in your control. That is game changing. Next, we have you don't need to know what happens next to make money. And that literally follows on to what I said at the start. I used to try and predict the price. Now, with the edge that I use, I react to what is happening to the price and where it is. I don't try and predict what's going to happen. I never know if my trade's going to be a winner or a loser, and I'm happy with that. And I have data to back that. And I can see in my data that over a long period of time, my edge is an edge. So I have utmost confidence and I do not need to predict what happens next. If you do not have the same confidence in your own strategy, you need to backtest more. And if you've backtested and your data's shit, then yeah, you can change to another strategy. Don't let someone tell you that you got to stick to one strategy for your whole life. If you've done the backtesting and the data's dog shit, why on earth are you going to carry on changing that strategy? Make sure that you have an edge and do not try and predict the market. Do not try and predict every day. I've got a really good buddy and he does swing trading, and fair play, like he's a beast. He's still profitable. He gets payouts every month. But every time he takes a trade, no matter what he thinks, he doesn't have backtested data. He doesn't know what is going to happen. And over a really, really long period of time, it could end up being unprofitable. Who knows? Or it could be profitable. He doesn't know. But he's trying to predict the market and he doesn't have the data to back it. You need the edge. Wins and losses are randomly distributed. And once you have backtested, this is where you'll see that winning and losing does not matter at all. When you have a losing day, a losing period, it does not matter at all, because you can see in your data that winning periods and losing periods happen randomly, and in the end you just see the R count just stacking up and up and up and up. And yeah, it just gives you that utmost confidence. It's like wins and losses are, you don't need to figure it out. You don't need a winning streak. When you get on a winning streak, don't think you're invincible, untouchable. If you're on a winning streak, you should know that the next day, the day after, you're going to lose. You should always know that. An edge is just a higher probability of one thing happening than another. That is true. So even if you've got your edge, you've done your back testing, every single trade, we're just in a probabilistic game here, boys. Every single trade is a new key event within itself, a new moment in time, and there is no guarantees ever. How do you reach this state? Oh wait, no, we skipped some shit. There we go. Look, every moment in the market is unique. Market conditions are never the same twice. Each trade is a unique event, independent on the last. This prevents you from carrying the emotional baggage of the previous trade onto the next. I pretty much already covered that, boys. I pretty much already covered that. Right. So the 5 fundamental truths to cultivate a probability-based mindset. So we've gone over the 5 truths about trading. Now, these are the 5 truths that you need to cultivate the mindset to be a probability-based trader. So when you actually truly believe this shit, when you delusionally believe this stuff, you will then have that mindset. And it takes time. You can't just brainwash yourself overnight. You're going to have to work at it for months, just chipping away at the mental, chipping away. And this is what Buddy Douglas himself wrote. When you really believe that trading is a simple probability game, concepts like right or wrong, win or lose no longer have the same significance. And that is so true. I mean, I literally just filmed my daily recap. I took a 0.5R loss, and when I took that loss, I didn't even bat an eyelid. I mean, I took that across all my accounts, every account, 50k account, 10k accounts, all of them, they all got fired, and I didn't bat an eyelid because I don't care about a single result of a trade. I don't care anymore. It doesn't matter. How do you reach this state? We've pretty much covered that. So here are the 5 key fundamental truths to build the probability mindset. Accepting the risk of each trade. So if you are not currently having a fixed percent of your balance that you're risking every trade, how on earth are you sleeping at night, boys? Come on, what are you doing? You are literally, like, how do you know that you're going to be in a winning or losing period? One period you could be up like 3 trades in a row, and then you're risking 0.5% then, but then you could lose the next 6 trades and you're risking 2%. It's just, yeah, you need to be risking the same amount every time at a fixed level on the account per stage, whatever you feel comfortable with, and you need to be at peace with the worst case scenario every time. You need to be happy that every single account you buy, every single trade you take loses. You need to literally treat the shit like a business. With a business, they have outgoings. You have business costs every month. Some months they may not make sales. Shit's not going to turn over. Like, this is a brutal game where you will lose more every month than other professions will when you're at a high level. But every single type of business model has outgoing costs. You are going to be blowing through evals. You're going to be down. I'm down. It happens. Let go of the need to be right. We've pretty much already discussed this heavily, but I'm going to go over it again. You just need to detach that ego from every single trade, every moment in the market, because when you give your energy to the market, it's essentially an energy transfer. So if you perceive the market data as negative or positive, that is how you're going to perceive it every time you take a loss or take a win. So if you get gassed when you win a trade, if you get gassed when you lose a trade, that is exchanging negative or positive emotion from the market. You do not need to be right on every single trade. You do not need to give your energy away to the market on every single trade. You don't have to have an emotional reaction to every trade. If you look back and the whole year you're down, yeah, you could be like, oh, you could feel a bit shit. But you can't be you can't be caring about every single trade. Every single trade is a new moment in time, and every single second is a new opportunity. So let that sink in, boys. Staying calm under uncertainty. Train yourself to expect the unexpected. When anything can happen, there's no room for anger and shock. As Douglas says, when I put on a trade, all I expect is something will happen. I've pretty much just drilled that into you fellas, so I'm not going to go over that again. By removing the emotional significance of any one trade, you can create a mental environment where you can respond to the market information neutrally. Yeah. No internal battles. This is trading with a clear mind, able to see and act upon opportunities in the present moment. This is trading in the zone. So essentially, everything I've just covered is you pretty much need to just detach yourself completely from the result of one singular trade. And the only way you can do that is by trusting your system and trusting your data. So as soon as you can trust what you are doing, you will no longer worry about the significance of one trade. You think a plumber, yeah, he's been training for he's done his apprenticeship, he's been training for 5-10 years, he starts his own business, yeah. He's not thinking about one job. He's smashing out loads of little jobs every week, getting a few big jobs going. He's stacking up. He doesn't care about one little singular small job. With trading, if you've got a system that is actually profitable over time, there's never going to be one single trade that saves you. There's not going to be there might be one single run that gets you out of a position that you're in, but there's not going to be one trade that saves you. So Here are some of the key pillars of thinking in probabilities. And we've already just gone over that every trade is independent. You can have a little read here, but every market outcome is unique and random. Probability over certainty. Stop trying to be 100% sure about your fucking trade. Stop trying to predict the market. Always be thinking in terms of odds. There's no right or wrong. All there is numbers going up or down. Already, audio just cut. We are now going to dive into the 7 principles of consistent trading. So the first one is knowing your edge, being crystal clear about what advantage your edge gives you, knowing what it is that you are looking for before you execute your trade. But if you don't have set rules before you're executing your trade, you are gambling. Straight up, you are fucking gambling, boys. Know your fucking edge, know your strategy, have it back tested, and stick to your rules. Predefine your risk by every trade. We've gone over this already, but it needs to be said. Risk the same amount on every trade, and don't try and hope and rationalize that if I pass this trade, oh my god, my funding's gonna be passed. I fell into that pitfall, mate. I literally broke my fucking plan because I was like 50 cents off a fucking passing, and I just chucked on a little trade. I shouldn't have done that. Never. I knew how much I was willing to lose there. I just put $80 on the stop loss, but I shouldn't have done that. One, I broke my plan. But predefine your risk on every single trade. Fully accepting the risk. This is a psychological follow-up. That trade could be a loser. Fully accept that you're going to lose everything you put into the market. Act on your edge without hesitation. As soon as you see that setup, execute. Boom. Don't second guess. Don't wait. Don't let doubt creep in. Execute on your opportunity, or you're going to have a missed fucking entry, or you're going to have a worse entry, or you're just going to lose your head and start spinning out. Take profits when the market offers them. So for me personally, I like to use fixed targets. I have a fixed set amount that I'll get every time that I enter the market. So this doesn't really apply for me, but if you are dealing with dynamic sort of profit targets, make sure you've defined that before you enter the trade. This prevents you getting greedy. This prevents turning winning trades into losers, letting your trade go up to 10R, then coming back down and stopping you out at break even. Yeah. Be disciplined, boys. Just have set rules for where you're taking your profits and when you're getting stopped out. Monitor yourself. This is probably the most important one and the most looked over part of any type of training, education, and training that I've seen on YouTube before I joined the TMB. And monitoring yourself and keeping yourself accountable every day and leveling up every single aspect of your life is critical if you want to be a successful trader, and it is needed. You need to be accountable. You need to be true to your own word, and if you're disciplined in every single aspect of your life, the trading just fucking follows. It's easy. Trust me on that. Now the final one is sticking to your rules without expectation of immediate reward. Just because you're executing your plan, it doesn't mean you're going to instantly start passing accounts, start getting money, start getting payouts, start reaping the rewards. It's going to take time for the system to truly set itself in place. And like I've said probably many times, I sound like a broken record in this video. That one trade is never going to save you. Always think long term. So boys, that's pretty much everything that I sort of found to be a key insight inside Trading in the Zone by Mark Douglas. If you haven't read it and you actually do manage, so if you manage to get to the end of this video, you can read a fucking book, trust me, because I was rambling on in this shit. So I hope you boys did get some value from this, and I hope you do actually, if you haven't, read this book, buy it yourself. It's got some incredible insights. That's the big Nez out. I hope you enjoyed. Education session to the dome.